Even as US tariffs cast a shadow, a glimmer of hope appears in the proposed GST revisions. FMCG and other consumer durables take a positive cue, but IT and auto continue to drag.
Reliance Industry holds its AGM this afternoon amid expectations of fresh insights into developments in its new energy business, even as indications on the expansion of its geo, retail and O2C verticals are keenly awaited.
A raft of changes across sectors are proposed by the group of ministers spanning automobiles, FMCG, consumer durables, apparel and more. Most experts believe the proposed revisions will give a significant boost to consumption.
A group of ministers bats for the common man in its GST review, while daily consumer products like toothpaste see a sharper tax cut. Even economy class cars, bikes and airline tickets along with hotel rooms will get cheaper, and luxury premium goods services will get dearer.
Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Mangalam Malu as well as Vinny Motiwala. Well, it is turning out to be a day where we're just about buying time, consolidating, and that's largely been the trend for us in the past couple of trading sessions. So currently the Nifty just about higher by around 40 odd points. We have the Bank Nifty which is up around 130 odd points, so doing a little better on that front, but marginally, and the mid-cap index seeing a little bit of a bounce back today. Well, it is all about the worries with regards to the tariffs of around 50% and what the impact could be on the economy. But yes, what the GST rationalization or the proposed rationalization could do to offset that is possibly keeping sentiment a little buoyant at this point in time. A lot of stocks in focus, guys.
A lot of stocks in focus, Ekta. Indeed, as we speak, we have the consumption stocks, none in more focus than those FMCG stocks, though it's been very choppy for the frontline index as well. We saw a good opening that after that was sold into, that tip was bought into, we went higher, and now we're off highs once again. So the Nifty holding, meandering around that 24,450 to 24,550 sort of mark. Right now, as we speak, a lot of these insurance stocks are picking pace. So HDFC Life comes up for you on the screen. Bajaj Finserv comes up for you on the screen as well. And alongside that, we have some traction that we've seen built on a couple of these other names like CG Power and, LIC Housing Finance as well. These stocks higher. By and large, more stocks higher than the number of stocks which are lower. But then again, we're still not out of danger, not out of the woods.
Absolutely. Good afternoon, guys. So, interesting day, I would say, given that at one point of time, we were seeing that underperformance coming in from the mid and small cap. Now, as of now, managing to hold on to some bit of a gain right now, 0.4% for mid cap, small cap, also managing to hold on to gains. And obviously, advance decline ratio is in the favor of advances versus declines as of now. And during this week, we've seen a lot of move that has come in from Ola Electric as well. Now, obviously, in this week itself, it's up almost 18-19%. This month, it was up almost 35% as well. And in our unusual mover segment, Sudarshan will focus on Ola Electric, which has surged more than 35% this month, like I was saying. Sudarshan, what's charging the stock this month, this week that we're seeing? What is leading to this run-up?
So first, talking about the stock move, this month it's set for the biggest monthly gain that stock has ever seen since listing. So it's up 36% this month so far and 19% this week. Also, another trigger is that company is set to become the number 2 player amongst all the electric two-wheelers. So if you take a look till the last week, Ather was the number 2 player, but just yesterday, Ola Electric has once again taken over. Now, as per Vahan registration data, registration for Ola Electric is more than Ather Energy. So as per Vahan registration data, Ola Electric's registration as of yesterday was 15,514 units against Ather Energy's registration of 15,457 units. Now, let's take a look at trading volume. So yesterday, total trading volume was around 85 lakhs, and that was against 7-day average of 53 lakhs. So it tells you that on a daily basis, Ola Electric continues to see huge trading volumes. Last week on one day, we had seen trading volume of more than 100 crore even. Now it's near the 200 daily moving average of 59.24, and from the low of 40, it has seen a sharp recovery. We'll have to see if it manages to cross the 200 day moving average of 59. Now let's take a look at the tailwinds going forward. So recently, company has secured PLI certification for Gen 3 scooters. Remember, Gen 3 scooter forms majority part of its volumes, almost 60 to 64% of total volumes. Now, receiving the certification for Gen 3 scooters, the company had already PLI certification for Gen 2 scooters, and now it's eligible for incentives in the range of 13 to 18% of total sales value, and that will be valid till 2028. Apart from this, after Q1 earnings, company had told that auto business EBITDA margin will turn positive in Q2, and for FY26, company is expecting auto business EBITDA margin to be 5% or more than that, and also it believes that after receiving PLI certification, profit is expected to improve further in Q2. So overall, it's looking positive for Ola Electric, not only in the stock price front, but even on the fundamental basis.
Okay, all right, Sudarshan, thanks very much for that. So that's Ola Electric buzzing in today's trading session, up around 2% at this point in time. Just watch out for Zydus because they've come out with a press release indicating that one of their key drugs, which is sarglitazar, which is basically being studied for liver conditions, has met some endpoints or seen a successful phase 2 study or phase 3 study. So we'll try and get you more details. It's a phase 2B study. So they've seen a successful outcome on that, and that's important for them because sarglitazar, which is basically a liver condition drug, is being looked at very closely for Zydus Life. More details on that later, but just keep that stock on your radar. We'll take a short break. We'll get you more markets and stocks on the other side. Stay tuned. Welcome back. Well, for the markets, it's turning out to be a bit of a steady session. So let's see how that pans out. Currently, we have the mid-cap index, which is up around 0.4%. Just want to point out a couple of stocks from the broader markets, which seem to be gaining some amount of steam. So we have Shriram Finance, which is up around 2.5%. Trent, which is not doing too badly, so up around 2% at this point in time. So a couple of these stocks are really leading from the front, you'd have to say, for the Nifty space. From the broader markets, just watch out for Granules India because that is showing a good amount of momentum. In fact, it's gained around 10% this week, and majority of the gains have come in at this point. Today itself, it's up around 8% odd. Year to date, not done great, so it's still down around 14% odd on a year to date basis. That's Granules for you. That stock at around 507 odd rupees, and RBL Bank, which is up around 5% odd as well. But let's talk about a couple of stocks which are in focus on account of the GST impact. Mangalam, tell us more about the FMCG sector and what can we expect?
Well, a couple of things. One, the sector was already on its way up after the last 2 quarters. In fact, the sector has been struggling for the last 6 to 8 quarters when it comes to growth, etc. So the street was hoping for some sort of revival to happen. Add to that, this additional push that, the government has given over and above the tax cuts and the interest rate cuts by the RBI will only lead to more money in the hands of people, which the belief is will lead to a further uptick in the consumer staples consumption or the volume growth itself. And that's exactly why these stocks are buzzing around. If you look at the biggest gainer right now, it's Colgate. Remember, the street was fearing that maybe the rate on toothpaste may not come down from 18%. But now that we understand from sources that Tim C has been speaking to, that it will come down to 5%. There is that additional kicker that has come in. So Colgate, which has been an underperformer, is now catching up to all the other players as well. But the others, HUL, it's been doing well, ever since its first quarter numbers. Godrej Consumer has been doing well as well. So they are seeing some sort of gains, similar the kind of gains that we're seeing for Dabur and Britannia. What is it that is not doing well? We have Varun Beverages because, the expectation was that for carbonated beverages, the 28% slab moves all the way up to 40%. So 18 to 5% goes down on all the categories which are there for you on the screen. And for carbonated beverages, goes from 28% to 40%. Footwear stocks, now they're buzzing. More importantly, because out there is a unilateral decline in, the taxes. So the current tax at around 18% for footwear above 2,500 rupees comes down to 12%. And similarly, for footwear which is below 2,500, the tax comes down from 12% to 5%. And remember, over 90% of the country's footwear volumes that are sold are, in the organized space at least, are sub 2,500 rupees. In fact, a lot more than that. So that's a big positive for the entire space. And the ones that are offering value footwear, which is the likes of Bata and Relaxo, are benefiting the most. Relaxo, a stock which has been an underperformer, also bouncing back. And finally, we'll watch out for hotel stocks. We have the likes of Lemon Tree, etc. They're doing well. Not the luxury hotel space, because the cap is for 7,500, the rooms under 7,500 rupees per night. And out there, the only thing we'll have to watch out for is the catch, which is the input tax credit. Currently, they are proposing that the 12% rate, which is along with the input tax credit, goes down to 5% without the input tax credit. What the modalities of that would be is something we'll have to await and watch out for from the GST Council meet outcome.
Okay, all right. So that will be something that we will be watching out for in terms of the impact of GST on FMCG. Well, on that note, we're going to take a short break, but we'll get you a lot more in terms of buzzing stocks. It's a very live market in terms of stocks. So all that and more after a short break.
Welcome back to Half-Time Report on CNBC-TV18. Nifty, as of now, is managing to hold on to gains of 50-odd points as of now. Not much of a gain there. 24,550 is what it's managing to hold on to. A lot of movers on the back of volume, right? We're seeing today that is Sammaan Capital is among one of them. We have RBL Bank, Granules, also managing to hold on to very, very strong gains, 8% gains as of now. And CG Power also is managing to hold on to gains on the back of a news flow that is coming in as well. Specifically in the last, 20, 30 odd minutes that we're seeing a sharp move coming in for GE T&D. Keep an eye out on that one. 1% up in the last 20 odd minutes. We have SPFC Finance that has seen a bit of a gain, and Aadhar Housing Finance. These are some of the names also that have seen a run up coming in the last 20 minutes is what I'm highlighting, right? See, a bit of a spike up from the day's lowest point. We're surely seeing all these are seeing a bit of an up move. Other housing managing to hold on to gains of almost 1% as well. Among some of these losers in the last 1 hour, we have Vodafone Idea. That's a bit under pressure today. Keep an eye out on that. Ola Electric has come off the day's highest point right now. So keep an eye out on Ola Electric. Chambal Fertilizers, a bit off the day's highest point that these stocks have moved. So off the lows is what we're seeing coming in for these stocks in today's trading session. But let's move on and talk about some of these other stocks that are buzzing in trade. And Vamakshi is joining with us for those details. Vamakshi?
Well, absolutely, Vinny. Take a look at Jindal Poly. There was a very sharp spike in the stock today. In fact, the company posted the biggest intraday advance that it has seen since December 2nd, 2024. Now, over 6.3 lakh shares have been traded so far, which is almost 19 times higher as compared to the 30-day average volume. But despite the kind of strong up move that we're seeing yesterday, the stock is still down almost 40% in 2025 so far. The next stock that we're focusing on is Apollo Micro. The stock has managed to hit an all-time high. In fact, it has managed to post gains in 8 out of the last 10 sessions. So it has been having a good run. In fact, up almost 47% in the last 30 days. And this move that we're seeing today is coming on the back of very strong volumes, almost over 3 crore shares traded so far, which is twice the volume that we saw yesterday. Sammaan Capital is another counter that is on our radar today. The company has managed to snap a 4-day declining streak. This is because the stock has started trading as an F&O stock today. We have over 3.6 crore shares that have been traded so far, which is almost 3 times higher as compared to the 30-day average. But despite that, the stock has not done well over the last year, down almost 23%. But apart from that, take a look at Orient Cement. On the downside, it has hit a 52-week low. We are seeing consistent pressure on this counter over the past 5 days, and year to date, the stock has declined over 36%. And lastly, take a look at Sun TV as well. This stock too has hit a 52-week low in today's trading session, marking the 7th consecutive day of decline for this particular counter. The stock has not been doing well in the past 1 year itself, down almost 30%.
Okay, all right, Vamakshi, thanks very much for that. Yes, a lot of buzzing stocks in today's trading session. We'll take a short break, but we'll get you a lot more on the markets, a lot of opinion on the other side as well. Stay tuned. Welcome back. Giving up a little bit of gains for the Nifty, so just about higher by around 32 odd points. We have the mid-cap index also, which has cooled off a little bit. So both these indices should come up for you. As you can see, there's a little bit of a nick which has taken place just in the past couple of minutes. But Mangalam is now joining in to tell us what he's tracking on the F&O side. Mangalam, over to you now.
If you look at the markets, there have been higher, but they've been off highs as well. So it's choppy, but green is what the street will like. So if you look at the Nifty Bank, the mid-cap index is the one which is actually outperforming today. The Nifty holding up with gains of just about 0.25%. And the advanced decline ratio, the crisscross lines tell you that there are way more number of stocks which are advancing after the first hour of volatility. Now the green line firmly above the red line itself. And all of that is reflected in the way the volatility index, the India VIX, has cooled off as well. Last I checked was down about 3%. Right now, as we look at it, it's down about 3.76%. So sub that 12 mark. So on an absolute basis, extremely important as well. Now, active Nifty options, let's look at the ones, because the next, weekly expiry for the Nifty happens on Tuesday. Remember, yesterday was the last Thursday expiry for Nifty for the NSE options. Now, coming week, we have the first expiry, the weekly options expiry on September 2nd itself. And the street believes that there would be strong support around that 24,450 to 24,500 mark, because the 24,500 put is extremely active, nearly 2 crore shares in open interest. On the way up, though, we will see some supply coming in at 24,650 to 24,750. That's what the call writers at 25,600 and 25,700, rather 24,600 and 24,700 are bracing themselves for. A bunch of stocks that are on our radar on day one of September series. It's Sammaan Capital, the erstwhile Indiabulls Housing Finance. Sammaan Capital is now in focus on account of, the re-entry in F&O in September series. The stock, earlier named Indiabulls Housing Finance, excluded from F&O trading since December 2023, and the high that time was around 236. So Sammaan Capital is definitely the stock we're watching out for. There have been fresh longs added on both Samvardhana and RBL Bank, and a lot of shorts covered in Colgate. And finally, I'm watching out for names like Granules and IRB. The intraday chart of Granules and IRB come up for you. Both of them doing extremely well. You'd wonder, why am I talking about these cash stocks in F&O? Because until yesterday, they were in F&O. Now they are cash stocks. So Granules picking up, IRB doing well. On the other side, we have Jindal Stainless and SJVN, both of them seeing some selling as they were being excluded from F&O trade, currently lower in trade.
Okay, Mangalam, thank you so much for that. Keeping an eye out on all those names over there as well. But let's, on that note, bring on board Ajit Mishra of Reliance Broking to talk to us about the technicals and the market front as well. Ajit, good afternoon. Thank you so much for giving us your time. Just give us the levels that you are keeping an eye out on this new series, Nifty and Nifty Bank, as well as which are the stocks that you're keeping an eye out on.
Yeah, good afternoon, Vinay. So, yes, the last 2 weeks we were seeing that markets were witnessing a bit of a profit-taking, rather recovery. And this week, again, the profit-taking has resumed, largely due to the underperformance of the banking space. Banking index in today's session, so we have tested the 200 EMA. Nifty has gradually inching towards the same level, means we've started this recovery from 24,350 last time. And the long-term averages are placed around 24,250. So this 100-point zone, 24,250 to 350, will continue to be the strong support area for the index, with banking already looking oversold and trading closer to its long-term averages. Possibility of consolidation and some rebound is there. Upside, still we feel that 24,650 to 800 will be the area where Nifty is going to face resistance. So for a time being now, it's prudent to stick with the stock-specific approach, wherein we are seeing strength, relatively higher strength. It could be across pockets. So today, Cipla is one stock from the pharma basket. which has been inching gradually higher post the consolidation range breakout. 1660 is what we are eyeing in the near future. So 1550 with that as a stop loss, one can accumulate supply at current levels. At the same time, while the banking index looks oversold and there could be some bit of a rebound, IndusInd Bank is still struggling. Means it's been underperforming within the sector and it's gradually drifting lower. Indications are in the favor of more pain ahead, with 715 being the next immediate target. So with stop at 760, one can go short in IndusInd Bank even at current levels.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and giving us all of those technical calls. So that's the update coming in on the markets. But let's shift focus to what has been an interesting topic in the past couple of days, where the Association of Healthcare Providers of India, remember, had advised member hospitals in the north to stop providing cashless treatment facilities for policyholders of Bajaj Allianz. They held a meeting yesterday, and now the outcome of the meeting is that the AHPI has revoked the order withdrawing cashless facility for Bajaj Allianz members. So now we have with us Dr. Giridhar Gyani, who is the Director General, Association of Healthcare Providers, to take us through what the meeting was and what the way forward would be. Dr. Gyani, thank you very much for joining in. So tell us now, the Association of Healthcare Providers of India, you all met with Bajaj Allianz and you all have withdrawn the ban against Bajaj Allianz now? Okay, I think there's a little bit of an issue in terms of the audio there. We'll get back to Dr. Gyani. But, Vinny, this was interesting because we do understand that now the cashless treatment is going to be allowed, but it's still a way forward in terms of the discussion.
Isn't it a bit of a worry? Because I think cashless is one of the services that really help, patients at a time like that.
Exactly. So, as of now, the hospitals and the insurance companies have to really discuss and come to a common ground in terms of the issues that they have. So, for example, they had issues with regards to new empanelment, rates revisions, where insurers have not revised rates for years, leading to undue financial stress on the hospitals, and other issues such as deductions. Maybe we have Dr. Gyani back with us? Okay, we'll do one thing. We'll take a break on that note, but we'll get back and discuss this issue with Dr. Gyani just after a short bit. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is still holding on to 24,500 levels. Keep an eye on that. But now it's time to put the spotlight on crude and precious metals. Manisha Gupta caught up with commodities big voice Peter McGuire to determine the direction for crude oil, gold and silver. Take a look at what he had to say.
And I look at the market and I say, right, it is having a little bit of a bounce to the upside. You can't deny that. 68.20 for Brent and 64.15 sort of number for WTI. Now, it's had a little bit of and you had that US dollar, running at around about 98. I'm fairly confident that you're going to see softer prices rolling into Q4. At the meantime, you've had a bounce up, as you mentioned, The situation with Ukraine and Russia hasn't been put to bed in any fashion or form, and they're now saying that they may not meet. So I understood that from Germany and Mr. Merz. So the situation could actually escalate further, and that's going to probably cause more geopolitical concerns in the fabric of the energy markets, Manisha. So that's the situation at the moment. And traders are enjoying the volatility.
Oh, they sure are. Peter, what's your sense then? You've been maintaining that the crude oil prices will be on a range going forward for the rest of this year as well. Would you continue to reiterate that at a pivot 70s, perhaps what we're looking at in sense of prices?
Well, look, they might put a little bit further on, Manisha, but I think the overall consensus is, from the people that I'm talking to, the situation with OPEC Plus, you're probably going to see increasing production, as we all know. And the other side, of course, is going to be when that starts to drip feed into the market and really take some heat out of it. I'm sure that you're going to see low 60s and possibly into the 50s running into Q4 sometime. And then you've got, I think that'll maintain over that Northern Hemisphere winter period.
Peter, it's not just crude, but we've also seen gasoline prices, heating oil prices come under some pressure in the recent few days. Overnight, of course, has been a slightly stronger market. But what are the fundamentals you're watching here? Because with the Labor Day long weekend, the summer driving demand season in US comes to an end. How much of a pressure would that put on prices from here?
Well, I think, Manisha, I've listened to quite a few, I suppose, discussions as far as petrol prices in the States. And a lot of those cities and a lot of drivers are now experiencing sub $3 a gallon, which is a good sign. And some are even, much lower than that. And that is going to be a good sign for the economy. The absolute, I think, situation is going to be, again, cheaper prices. The whole storyline is one of, the big moving parts. But I'm pretty sure that you're going to see that situation as it starts to unfold. The demand side is going to probably wane a little bit because, as you mentioned, summer driving season comes to an end, and more production is going to be a wonderful situation for inflation. And I think the overall consensus is softer energy prices leading into Christmas.
Well, that got to be good news for many consumers there. But I also want to talk about silver, Peter. And we're trading at all-time highs in the Indian markets when it comes to silver. Global prices are still around that 14-year highs, but kind of run-up that we've seen in India, and that too especially ahead of festivals. The retail demand clearly has been on the higher side. Where do you see silver from here? Because investment demand, retail demand, industrial demand, all of those boxes seem to be getting ticked.
Oh, they're getting ticked, absolutely. You're running at 39.50, 39.55 at the moment, and it's had a really nice run up, and there it is, as far as Indian prices. As you said, all-time highs. I'm fairly confident that you're going to snap through 40 very, very shortly. And the overall momentum, I think, is going to be a continuation to the upside running into the last 4 months of the year, Manisha. We've got 8 months down nearly come tonight's trading. And then we start again, 1st of September on Monday. So I think the theme is going to be higher prices, US dollar again coming under more pressure to the downside. And it's going to probably take its big brother up for another ride to the upside as well.
You talked about gold, and yes, we're not too far away from all-time highs onto that one as well. 3,400 plus kind of levels holding. Are you looking at 3,500 taking out anytime soon?
Yeah, I think so. It's at 34.70. I'm looking at the screens. I mean, I think it's got the momentum at the moment to really charge ahead. Let's have a look and see what the Fed does. I think it's pretty much baked in. You're going to see a 25 basis point cut. So if that was to materialise, possibly it is already felt in the market, but that I think is going to run, more pressure to the downside for US dollar. And the overall momentum is going to be one of, jumping into precious metals and continuing the attraction to traders. And I mean, the market has been extraordinary this year. You can't deny it. I mean, just mind blowing what you've seen as far as uplift for gold and silver. So, yeah, I don't think the party's going to stop anytime soon, Manisha.
All right. So where are we headed? 36, 3,800? I mean, those are the levels that we've been talking about.
Absolutely. I mean, you're running 4 months till the end of the year. I think it's got the capacity to take those sort of numbers. Let's see where we are with Fed policy. And if they were to cut, are they looking at another cut, which seems to be, again, everyone's saying you'll probably see another cut as far as, November, say. So that's going to force more pressure to the US dollar to the downside and more uplift as far as what will happen with precious metals.
Okay, gold continues to shine. 5-week peak there for the markets, just about consolidating advanced decline ratio in positive terrain. So 2,400 stocks advancing to around 1,500 stocks declining. Let's see whether that sustains. As of now, sustaining with a good gap. We'll take a short break and be back with more. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty managing to hold on to gains of what we'd seen at the start of the show, right? 50 points. Not much of a move coming in on that front. IT, that's the one that we're seeing some pressure coming in on. So keep an eye out on the IT pack. Mid-cap managing to hold on to the gains that we're seeing coming in as well right now. So that is interesting to watch out for, where the broader end of the market will be moving in the second half of the day as well. But Reliance's 48th annual general meeting is just hours away. Let us bring you the key expectations, and Sonal is joining in with us to tell us about the expectations from the O2C business and the new energy business. Afternoon, Sonal.
Hey, thanks for that. Well, let me just sum up first the consolidated expectations. Of course, we'll discuss that in greater detail as well. The updates in consumer and enterprise digital business is something we'll be watching out for. The update on fast fashion business as well, and quick commerce in the retail segment. Any updates on the new energy business, very important because there have been a lot of developments in the last couple of financial years. And we'll also be watching out for any value unlocking or strategic announcements, because remember, the company had mentioned in 2019 that they will be looking at an IPO for telco and retail within 5 years itself. So that's something we'll be watching out for. For oil to chemicals business, let's start with that first up. Huge petchem capacity expansion, be it in polyester, vinyl, carbon fiber, all of them by FY27. That capex will be important to watch out for. In 2025, ramp up of new refineries is something which has led to lower cracks. However, there are expected closures as well. So that is something which could balance the refining margins, and that could see an uptick from there on. Now, demand for downstream chemicals products is expected to grow ahead of GDP overall in the country, and this is something that will be driven by demand that we'll see in infrastructure, packaging, autos and agriculture as well. Now let's talk about oil and gas business, because Reliance contributes substantially to overall consumption in the country. 28.5 MMSCMD of natural gas production, which is 30% share of India's gas supply itself. So that's a big chunk coming in from Reliance Industries itself. They do have plans to drill additional wells, and also in the KG Basin, they plan to enhance production. All of that will be key to watch. New energy, a very important part of the business from here on. The update on the fully integrated polysilicon to module, electrolyzer, battery manufacturing facility, and they also aim to operationalize new energy platform in next 4 to 6 quarters, which could add meaningfully to the SOTP as well. They will be seeing new operations in the new energy business in the next few years in solar, battery gigafactories. Once the engineering work is completed, equipment deliveries are also expected by 2025. Procurement has been finalized, and the scale solar PV module line has recently commenced operations. So how that adds to the overall business, what's the outlook going forward? New energy is one of the most important commentary that we'll be watching out for.
Okay, all right, Sonal, thanks very much for that. So yes, it's definitely going to be something to watch out for when it comes to the Reliance AGM. Well, for the markets, it's given up a little more in terms of gains. So the mid-cap index is absolutely flattened out now. So just about higher by around 60 odd points. The Nifty also just about holding with a gain of around 44 odd points. So there's definitely been a selling from the top, which has taken place for all of the indices. The Bank Nifty also just about trading with a gain of around 0.2%. Just about holding their head above the water at this point in time. The mid-cap index seeing the most incremental selling at the top amongst all of the indices. For the advanced decline ratio, it's still holding, but let's see whether that sustains or not as we go along. Let's see whether we, even see any kind of dip into the red for the markets. But next up is Jio. Rima joins in with the key expectations from the Reliance AGM.
Thanks so much for that. What everyone's watching, unlocking in Reliance Jio. It was in the 2019 AGM where Mukesh Ambani had first hinted about an IPO. He said it will take 5 years. But since then, the plans got delayed because the company was looking to strengthen the business. According to UBS, a Jio IPO, though, is still about 12 to 18 months away. So that said, what else will we watch? Well, strategy. Because in the last AGM, Mukesh Ambani spoke about doubling Jio's EBITDA in the next 3 to 4 years. So how do they plan to get about that? Also on broadband. Now, the company's made a lot of strides. Broadband is about 20 million households, but their goal is an ambitious $100 million in terms of households. How are they planning? How are they deploying artificial intelligence across the entire ecosystem, plus their space plans? And finally, let me leave you with the statistics as Reliance Jio currently stands. It's been aggressively adding subscriber. The subscriber base is, as of the June Q1 FY26 numbers, stands at nearly 500 million subscribers. 5G accounts accounts for 42% of that. Broadband is 20 million. The ARPU has now crossed the 200 mark. About 4 or 5 quarters back, the ARPU of the company was about 181. It now stands at 208. And Air Fiber customers are also at 7.4 million. But the one which will grab the headlines will be any talk about value unlocking. Back to you.
Absolutely. What we'll watch out for if there's any talk coming in for value unlocking there as well. So those were the key expectations that we saw coming in from Reliance, the O2C side of the business, new energy business, Jio. A lot of important updates that we will watch out for on that front. But next up, let's talk about Reliance Retail part as well. And what are we expecting here? Mangalam is joining in with us for that. Mangalam?
Well, Reliance's retail business has definitely been the growth driver. In fact, it's, wowed the street with the kind of numbers that it's delivered in a relatively short period. So FY25 was extremely strong, crossed the gross revenue of 3,30,000 crores with an EBITDA upwards of 25,000 crores. In fact, bigger than all the other retailers put together. And that's how big Reliance Retail was. Opened 2,659 new stores, which is more than, all the others that they operate as well. And the total stores are at 19,340 with a customer base upwards of 349 million. Strong growth from large format expansion is what came by, hyper-local deliveries and non-food catalogue, which was widened. And it was also reinforced as a partner of choice for Shein, ASOS, Delta Galil, Saks Fifth Avenue and JioMart. That scaled catalogue as well, along with quick commerce capability. Ajio saw an expanded capability and catalogue. Premium brands actually did a lot better. And there was steady performance coming in their fast fashion business. So all these things means that we have to watch out for what the growth prognosis for the next year would be. And one of the crown jewels of the company this time around has been the consumer business. The Reliance FMCG business now does 11,450 crore in sales. And this is just in second year of their operation. So the fastest growing FMCG company in the country right now belongs to Reliance. In fact, it's expanded its reach as well across general trade, leading to a nearly 3.5 times growth in sales coming in for Reliance consumer products. And Campa gained about double-digit market share. We had, Tags food acquisition that happened during the quarter, Independence, Allen's, Enzo, Ravalgaon, all these brands. So what is it that we'll be watching out for? Any sort of view on the strategy for next year? Alongside that, any new partnerships that they will come up with, any new large formats that they will open, what they do in quick commerce, but most importantly, any word on value unlocking, demerger of the FMCG business or the retail business itself is something that the street will eye very, very closely.
Okay, absolutely. So not much time to go for the AGM speech, which begins at 2 p.m. On that note, it's a wrap on Halftime Report. Thanks very much for watching. Business Lunch will take all of the action forward.